Hello and welcome to Startup Street. I'm Arundhati Ramnin and with me is Ritu Singh. These are the top headlines from the startup world. Citykart, a fashion retailer, has raised 538 crore rupees in Series B funding round, co-led by TPG NewQuest and A91 Partners. Investcorp, an early backer of Citykart, has made a full exit while India SME Fund continues to hold a minority stake.
Premium travel luggage and accessories brand Yumi has backed 25 crore rupees in a Series A equity funding round that was led by marquee investor Ashish Kacholia and others. The capital will be deployed to scale Yumi's retail presence across India, build a stronger team and ramp up marketing.
Phot.AI, a deep tech startup, has raised $5.4 million in a pre-Series A round led by Prime Venture Partners, bringing its total funding to $6.25 million. The company is building next-generation vision AI systems that help manufacturers automate and elevate quality control on their production lines.
Quick commerce platform Instamart has dropped parent Swiggy from its name in a strategic move that is aimed at carving a standalone brand identity. This comes days after rival Zomato, which owns Blinkit, rebranded itself as Eternal on the stock exchanges.
The world's top electric vehicle makers are in the slow lane. Tesla sales plunged 49% in Europe due to Elon Musk's political involvement and rising competition. Shares of Chinese EV giant BYD declined for the second day after reports of heightened regulatory scrutiny by Beijing.
Well, those are the headlines that we're tracking for you today on Startup Street. Now, in what's brewing today, Fintech unicorn Cred has secured $75 million in a Series G funding round that will be led by its existing backers, we've understood from sources. Now, GIC is going to lead this latest round along with Sofina and RTP Global. Founder Kunal Shah, we understand, is also expected to participate with a $20 million check through his VC firm, QED Innovation Labs. However, this latest round comes at a 45% valuation cut compared to Cred's last round in June of 2022, and this will value the fintech at $3.5 billion. Cred, however, did not comment on CNBC-TV18's story. So we move on from there, and what else is brewing today? Fleetx, which is a Gurugram-based logistics SaaS platform that has raised 113 crores in a Series C funding round that was led by IndiaMart and BNext. The company, which claims to have crossed more than 100 crores in annual recurring revenues and is nearing profitability, is eyeing a public listing in the coming 2 years. Fleetx currently serves more than 2,000 businesses across sectors like manufacturing, mining, FMCG, and cement. Now we're joined by Vineet Sharma, who's the co-founder and CEO of Fleetx, to understand the significance of this round and growth plans ahead. Vineet, thanks very much for your time here today on CNBC-TV18, and let's start with that fundraise. What will this 113 crore Series C round mean for this stage of your journey? How will you be deploying the money that you've raised?
Yeah, thanks for having me on the show. So we have raised 113 crore in our Series C round from our existing investors who have shown the faith in our journey and the product and the customers we have got so far. And they are very bullish on the future as well, right? We are going to deploy this money for the product innovations and the expansion of our product, which is one of our strengths as well. And then we are also going to invest in scaling our GTM as well, right? Primarily, we have majority of the revenue coming from Indian enterprises. So we are going to double down on our GTM to reach more and more enterprises in India.
Well, Vineet, your statement says you're close to profitability. What is that figure at? And can you give us a clear timeline as to when you're going to become fully profitable, on a year level?
So we have been focusing on our EBITDA numbers since last 2 years, and that has come down from minus 95% in FY23 to minus 29% in FY25. And we have doubled our revenue as well in those 2 years. So we have taken an aim that we will be profitable in this year. So FY26 is what we are looking at in terms of profitability.
Okay, FY26 is when Fleetx is going to be profitable. You also say, you were talking about your revenues crossing 100 crores in ARR. How much of that is coming from enterprise versus mid-market customers? And, what is the sort of trajectory you expect going ahead in the next 2 years, which are going to be crucial for the company?
So we are very bullish on our enterprise segment as well as mid-market. Mid-market is more predictable and it is more, you can say, scalable in terms of sales and GTM. Enterprise is more kind of a land and expand strategy for us, which is growing very fast. Which is growing very fast in last 2 years for us. So as of now, the current split is somewhere around 50% in both the segment. But we anticipate that in the coming 2 years, enterprise will grow much faster.
So as that happens in the next 2 years, are you confident you will be IPO ready, as you say? And for you to get there, could you specify the kind of milestones you're targeting, to achieve before you're going public?
Yeah, so obviously one of the most important parameter for going public, what we believe is the profitability. We are very focused on our capital efficiency and growing sustainably. So we are focusing currently on keeping the growth momentum, as well as you can say keeping our capital efficiency checked, right? So in terms of milestone, we are looking at doubling our revenue in next 18 to 24 months while become profitable.
Vineet, a lot of players are entering this space. What would you say, finally, if I were to ask you your real differentiator is? Is it your tech, integration, pricing, or even the customer relationships you've built?
So I think I'll say the product is the differentiator for us, right? We are one of the unique player who is providing end-to-end platform for, you can say, the likes of cement companies, FMCG, chemical, even the transportation and logistics to manage their logistic and physical operations. So right there, from telematics to workflows to AI and analytics, we are providing end-to-end solution rather than, you can say, integrating, you can say, different solution to solve a challenge. We are helping them with one single platform to manage end-to-end logistic operations.
All right, Vineet, we'll leave it at that. Thanks very much for joining us today. It's been a pleasure speaking with you. Thanks very much.
Thank you. Thank you.
From one fundraise to another, India's obsession with speed is now reshaping fashion. Bengaluru-based startup Slikk has raised $10 million in Series A funding round led by Nexus Venture Partners with participation from Lightspeed. Now, the platform, which promises curated fashion delivered in just 60 minutes, plans to use the capital to expand into new lifestyle categories, roll out instant returns, and deepen its reach across India's metros. As quick commerce extends beyond groceries, Slikk is betting big on impulse-driven fashion. Joining us now to discuss this further is Akshay Gulati, the co-founder and CEO of Slikk. Akshay, thank you so much for taking time out and being here with us on Startup Street. Q-commerce has traditionally been dominated by groceries and essentials, right? What makes fashion the next frontier in this space, and what are the operational challenges that you face while sort of doing fashion, in a time-bound manner? Take us through what you have on offer.
I think in any distribution cycle, for that matter, it doesn't matter whether it's GT, e-commerce, or quick commerce. I think two kinds of startups have fundamentally emerged. One is vertical and second is horizontal. While the larger players today in quick commerce, by the name of Zepto, Blinkit, Instamart, etc., focus on turning into horizontal players, I think Slikk is hell-bent in turning into a vertical leader in fashion and lifestyle. And that's one category wherein absolutely no innovation has been done in the last 10 years in terms of serviceability. So Slikk is supremely focused in terms of solving for serviceability for forward and return delivery in fashion and lifestyle space. And we think that's going to be the biggest differentiator for us at the moment. In terms of challenges, I think in a high width category like fashion, nobody's ever thought of building dark stores, keeping an inventory. That's a model very unheard of. Fashion and lifestyle operates on a model called dropship, and we're operating on a dark store model, which is completely unheard of. And that's the biggest challenge we're trying to overcome and trying to prove to the industry in front of.
So dark stores is the challenge that you're currently facing. But, congratulations on the $10 million that you've raised. If you could sort of walk us through how this funding will be deployed, what are your top 3 priorities over the next 12 months?
I think our primary focus in terms of, investment of the cash we've raised is going to be around supply. We intend to unlock a lot more categories in fashion and lifestyle and not just stick to apparel. We intend to unlock a lot more international and national brands for our customers. Second is pin code growth. We intend to enter more cities and discover more pin codes within Bangalore itself. So increasing the number of our dark stores rapidly. And third, I would say, is demand generation, which is going to be a critical part of our business.
Sure, and you've also found, strong traction with urban impulse-driven shoppers, right? If you could take us through where you're seeing the most demand and, what's next? More pin codes, more cities, or deeper penetration in the metros?
I think it goes both hand in hand. I think in a business like in a marketplace or a business, supply and demand gen has to go hand in hand. So as you focus more and more in terms of increasing selection and better pricing products, you also have to focus in terms of increasing outreach for brands and unlock more pin codes. And as you unlock more pin codes, new customers, one of them goes haywire and the business gets shaken up. So we have to sort of focus on both and balance it out.
Sure. And, I know it's only been like less than a year of operations right now, but if you could sort of take us through, are you seeing any revenues? What are you clocking? And how will you see this evolve as you sort of expand into newer categories? Do you think fashion can be profitable at QCOM speeds?
I think out of all categories, fashion has the most amount of probability in terms of turning profitable, primarily because of extremely high AOVs, right? Uh, Currently, at this moment, we're seeing AOVs upwards of 2,000 rupees in a single basket. Our AOVs are upwards of 2,000, because of which we're able to enable quite a lot of net revenue at an order level, which allows us to unlock profitability, at scale whenever we feel like, and we're able to consume the heaviest of the costs like our CAC, logistics fees, etc pretty much easily compared to any other category. So I don't think I worry about profitability in this category a lot. And in general, if you look at the existing marketplaces as well, this hasn't been a big challenge, right? Unlike grocery or any other category for that matter.
Sure.
In terms of our growth, we've been able to grow 2x month on month since the inception of this business, which sort of showcases extremely good traction, and our repeats have been super high, which sort of interests our investors more and more.
Right. And, speaking about that, so then what does your backend look like? You spoke about dark stores. So how are you sourcing your fashion SKUs and how do you ensure inventory agility across cities in a quick commerce model?
I think we are a supremely, and I think we've mentioned this before quite a few times, that we're a supremely curated. We operate on a supremely curated inventory model, which basically means that we don't onboard anything and everything from any set of brand we partner with. We onboard the top 20-30% selection, for which we use AI on the back end in terms of understanding which styles might be relevant to our customers and which might not be. And we try and track its success metrics as much as possible, right? Which allows the platform to have extremely amazing sell-through rates. These brands want to put in more and more inventory on Slikk day by day.
Sure. And, so many more questions to ask you, but we're completely out of time. Thank you so much for joining us on the show today, and we wish you all the best on this journey going forward.
Thank you very much.
On that note, it is time for us to head into a short break. But coming up next, ice cream brand Hocco scoops up 10 million in its Series B round. We put the company on the hot seat to find out more. Stay tuned.
Welcome back. You're watching Startup Street. Now, Ahmedabad-based premium ice cream brand Hocco has announced a $10 million raise as part of its Series B round that was co-led by the Chona family office along with Source VC. Now, with premiumization and new age consumer trends reshaping the food and beverage category, Hocco claims to be building the next generation dairy and dessert brand. Joining us now is Ankit Chona, who's a promoter of the company, to talk about this round, the roadmap, and what it takes to really build a modern legacy brand in a very, very crowded market. Also with me is my colleague, Arundhati. Ankit, welcome to Startup Street. Thanks very much for your time here. Tell us about this $10 million tranche in your Series B round. Is the full $20 million round committed already? And can you break down the expected use in terms of proceeds?
Sure. So, well, thanks for having me. So this is actually going to be between a $20 and $25 million round that we're going to do. So the first tranche is coming now because we've started the expansion for the next year. And after that, we will take it forward and raise the next tranche over the next 3 to 6 months. And the idea is that we're going to use most of this capital for the fund expanding our capacity and entering new markets.
Right. Hi, Ankit. Arundhati stepping in here. From a growth standpoint, right, what markets are you prioritizing next? And how are you sort of approaching this geographic expansion in a segment with strong regional competition?
Sure. So, we are currently in Gujarat, Maharashtra, Rajasthan, NCR, and very, very small parts of Madhya Pradesh. So the plan is to now go deeper into all these territories. We're pretty much in 100% of Gujarat. We're going to go deeper into Madhya Pradesh. We're going to expand into all of Uttar Pradesh, and then we will also go in certain parts of South India, mainly Telangana. We might do Goa. So we're figuring it out right now because we first have to build up our capacity. Expanding geographies is the easy part. It's actually building the capacity that we're struggling with right now because this summer has been quite brutal for us as far as reaching our demand. We quadrupled capacity over last year, but we've still not even been able to keep up with demand.
All right, Ankit, let me ask you then, since the demand is so large and you're struggling to keep up with capacity, what does the current production look like across your brands? I mean, I'm talking about Hocco, Uber, Holly, all of them. And how much will this new round enable you to scale capacity by in terms of volumes and even SKUs?
So SKUs is never really a very big challenge, but as far as our overall capacity, currently we're at about 1.3 lakh liters of ice cream per day. Last year we were at about 35,000 liters of ice cream per day, and with this new investment, we want to scale up to 2.5 lakh liters. So we want to double from where we are currently at, and it's a race against time right now because and that's why we had to prepone our fundraise as well because. The kind of green shoots and tailwinds we are seeing, we wanted to start the capex a lot earlier. So, and that's what we're doing right now. We've already, we've acquired additional land next to our current facility, and we're also starting construction in the north to feed the north market as well. So we'll have 2 plants hopefully before next summer.
Sure, and if you can sort of speak to how your distribution mix is evolving, what's the share that's coming from Q-commerce, D2C, offline retail, and what's the margin profile across these channels?
So, so the margin is pretty much even. Obviously, in quick commerce, there's a slightly higher margin that needs to be shared with the channels, and therefore the product mix also differs a little bit. But currently, we are at 80% is coming from offline and 20% is coming from quick commerce. Ice cream, there isn't too much of, or rather there is zero D2C that happens because you can't really do your own distribution. So it's 80-20 right now. And I think with the way the trend is going, we will be at 70-30 next year. So, the growth of quick commerce is probably double that of general trade and modern trade right now.
Well, Ankit, let me step back and ask you a broader question. As someone, of course, who's been in this space for a very long time, you have more over almost 13 years. And then, of course, for the last 7-8 years, you've been here. This premium ice cream space is really heating up. Both domestic and global players are expanding. What is really your differentiation strategy today? I mean, apart from price point, flavors, distribution, what exactly are you focusing on?
So, well, first of all, I've been with Hocco. We've only been in the market for about this is our second summer. So And with this whole, onset of quick commerce, even I feel like a true startup, because even I'm learning how to sell ice creams on quick commerce and all. But I think overall, see, premiumization is happening across the world, and ice cream is no different. What we are seeing different is that, other than people are willing to experiment, people are looking at healthier options, people are looking at, different form factors. So, for example, this summer we launched this one ice cream called Amchi, which is actually a mango ice cream shaped like a mango, looks like a mango, and obviously tastes like a mango. And and it is packed in a, in it's almost like a tamper-proof kind of packing that we've done. And we have been blown away by the demand that we've seen. It's probably 10x of what we can manufacture right now. And we are really struggling with it. So, and the same thing goes with another category of cones. Everybody does the regular cones, which are, priced anywhere between 20 and 50, 60 rupees. But we came out with this ball top cone, which is called the O cone, because it looks like an O on the top. And, again, it's priced at 90 rupees a cone, which is probably one of the more expensive cones in the market. And again, the demand has been incredible. So, it's a fully automated process we follow on that. But even then, we can't keep up with demand. And interestingly, it is selling both on quick commerce and in general trade as well. So, usually we always feel that quick commerce is, where you can have more premium products. But this, in our case, it's, both these segments where we are seeing these kind of products grow quite rapidly. And obviously, we also launched Huber and Holly, which is an ultra premium ice cream brand, which has some very interesting flavor profiles such as Amarana cherry and Sicilian pistachio and salted caramel popcorn. So, it's all about people who are willing to experiment, people are willing to try new ice creams. And I think customers are giving it a fair shot and are willing to do that, try new products as well.
Sure. All right, Ankit, we're completely out of time, but thank you so much for joining us on Startup Street today.
Pleasure.
Moving on, AI is changing how online sellers do business, from product photos to marketing. One startup aiming to be at the center of this shift is Phot.AI, which just raised $2.7 million with backing from InfoEdge and already has over 3 million users. My colleague Aishwarya Anand spoke with co-founder Venus Duria to learn how they plan to scale and compete with giants like Adobe and Canva. Take a look.
Venus, my first question to you is that you've recently raised $2.7 million in your seed funding, and you've gotten some big investors, including InfoEdge, on the cap table. Help me understand, where are you planning to allocate those funds?
We raised that capital to complete our co-pilot and agents that we are building for commerce and online sellers. And we are using it for research and building our AI team along with the development part. And once it got developed, and we'll use the remaining capital for the GTM, where we want to target early sellers in the commerce and marketplaces for our scale.
With over 3 million signups before even your official launch, what strategies today have you put in place to convert them into active paying customers?
Okay. So apparently we how we got 3 million signups first. I'll talk about that. I mean, we definitely need a lot of data, and for that, and we launch a lot of free tools in the market, and these tools are helping different companies to do different tasks. For example, AI product photography is one of our model, which help you to do the photography, and it's pretty agnostic in nature, which you can use it for any kind of product to create your photographs. And second is a tool like Upscaler. If you have a pixelated image, you can upscale it. Third, we got a tool like as basic as background remover, and which also helping us to gain a lot of data, which is helping us as a data set to make our own model for the graphics.
Correct.
So that's one of the reason. And now within those 3 million sign up, there are a certain percentage which is hobbies and casual users who are using it to create the images for their personal use. But the remaining is ICP, which is coming for their use. These are the set of people who are photo editors, designers, and marketeers.
You're also working in a space where there are legacy players already. Whether it's Canva, whether it's Adobe, they're also bringing in AI. So how do you differentiate yourself?
Adobe and Canva are built in very horizontal way. Anybody can use them for their design purposes, but we are building in a very vertical focused marketplace and specifically building for the commerce use case. I mean, it's solving the workflow now. For example, we get integrated with the Shopify or Amazon of the system, where a seller can pull all their content up and can generate the command basis on that. We also do the brand training basis on what kind of content you typically generate. We understand that language as well. And third, like we are mostly, I mean, completing a workflow in such a way. For example, as a seller, first you want to do the product photography, we are automating that. Then you launch your product to a marketplace like Amazon on your own website, we are automating that content. Then you want to do the advertisement, you create ads, we are automating that content. Then after that you want to do the product marketing. Now users are already there, you want to do the notification, you want to do the email, blogs, we are automating that. So in that sense, we are picking from how a seller start from the scratch and keep moving ahead in his journey, and what kind of asset he need during that journey, and how we can use the integration within those systems where he do not need to worry about having different designers. And also the bandwidth is also a challenge. Using this platform like Adobe, you're not able to create multiple campaigns, and multiple campaigns are needed to do the A/B testing to increase your CTR or the ROS for your advertisement or your product listing. And for that, I guess you need a environment where you can create thousands of assets in different design, in different languages, in different sizes. This environment Canva and Adobe currently do not support.
Okay, all right. Give me a sense of how many customers do you currently have on the platform, and how are you priced for them?
Right now we have two different models. One is three different models actually. One is for small sellers who are using it, small sellers and small teams. We typically sell them at $20 per month, and then we have an enterprise plan as well. And second is APIs. We charge them on number of API hits and number of consumage basically they are doing on our platform. And second is stateway model, like for small seller, they typically come and sign up and start using a platform immediately. So right now, the percentage wise, it would be 60-70% users and revenue coming from the B2C users, and 30-40% coming from the B2B side.
On that note, we're going to wrap up this edition of Startup Street. From Arundhati Needs a goodbye, but stay with us. More news and updates will continue on the other side.